Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Hey, Jerry, it's been quite a week on the precious metals front. I mean, we've been talking about this for about 3 weeks. That once we got Greece out of the front page of the news, we knew all the metals were going to explode up, and that's exactly what has happened. And certainly while the Greece problems are not over forever, they are off the front page of the news, and the quantitative easing, both in Europe as well as the U.S., has started in earnest. You know, when you think about it here, you know, last year gold goes up 11%. For the year 2011, we're up 14% in 2 months this year, and I don't think we're halfway to where we're going to get, and we're just going to continue to see the deterioration of the dollar as the quantitative easing. If anybody saw the Federal Reserve's release on the money supply this week, it's literally parabolic. It's straight up. They're printing as much liquidity as they possibly can. We've seen the interest rate on the 30-year Treasury and the 10-year Treasury notes jump. So it's playing out just like we've talked about for the last year. We knew there wouldn't be a recession during the election year, and the quantitative easing and the money printing has started, and it's going to continue to affect the metals to the upside. We think this current breakout, where it's broken from 720 up into the 1780s, will continue into the 1800s without very much resistance, and even then, it'll just be a short down tick before it goes up higher. We're seeing on a personal front more and more financial advisors calling and asking their clients to put a bigger percentage into metals when you look at the track record of the past 11 years, and then especially of the last 2 months. So, you know, things we're really from the retail level starting to see the expansion of privates not only coming in for the first time, but the ones that already own precious metals are buying more. So expect more of the same from gold for the next several weeks through March. Silver has just exploded. It's now up 27% for the first 2 months here this year after going down 9%. We think the buy signal right now is just coming in for most of the world. It needs to get above 35, and now we think it'll get to 38 before there's any resistance. So, in other words, we'll see silver up 35% in the first 2 months, 2.5 months, before there's any resistance, and we're starting to see that shortage we've talked about for several weeks in certain items in the silver products. And we'll get into more detail next week as I've got interviews and conference calls with the major refineries on Tuesday to see what the supply situation looks like. But once again, anybody that doesn't have silver, first is a bedrock for barter if there were bank closings that are still rumored out there to be in the cards for 2012. And then thirdly, it's just been an incredible rebound for palladium. I've held in there and held the line. We went in at 714 in August the 4th, and it ran up to 850, and then the Greece crisis started, and by October, November, December, we saw it go all the way to 550, but we kept the faith, and I kept buying, and so did many of you listening, and you've been rewarded as I have. We now see palladium back to where it was on August the 4th, and I think the next 6 weeks, we're still going to get over $800 target, and it's still not too late to be buying palladium. While I've never given an official buy signal on platinum, it is skyrocketed too. It's up 15% this year. I certainly think platinum has a small spot in your portfolio, and really there's only two kinds of platinum we can buy, either the platinum platypus, the coin from Australia, or the COMEX 1 ounce platinum bars. But still, it's a thing you may want to put a little bit into. I think it's always great to diversify in these metals. And if the housing industry starts up and this inflation picks real estate back up, platinum, due to their usage in windows, especially in colder areas, we're going to see an explosion. One of the guys I talked to, he's a top platinum trader in the country, and he tells me this metal is so rare, it just needs a little bit of demand, and it'll go up 20 or 30% above gold, where it stayed most of the 2000s until last year, when it actually moved down about $250 an ounce below gold. And now it's about $100 an ounce below gold. So it's closing the gap back, but due to its rarity, it'll probably get there. So right now we're in a buy mode, Jerry, on all four of the metals, and it's just going to be a great, great year because it's pretty well set now. Even though we weren't 100% sure, you and I stood there and kept talking that we thought it'd be a year of quantitative easing, a year of not going into recession. And even if necessary, we felt the U.S. would get involved in the Greece situation because of how closely the money center banks in the U.S. are tied to that debt in Europe. So we felt all along they weren't going to let that happen. So hopefully this has given our listeners a good update for the week. This is Tom Cloud signing out with this week's Precious Metals Market Update.